How I spot every trend in financial markets. In this video, I'm going to break down the easiest way to spot trends in markets. This method will make you never feel, left out, not on board. This is the simplest way, in my view. And saying that, this is all according to my own research, my own opinion. If you do want to keep up to markets and get an understanding of what I'm doing, check out my free newsletter. Link to that will be in the description. Making daily decisions is stressful. The pressure of deciding what to do every day is hard to sustain. If you've got a full-time job, if you've got other things going on, markets move every day, right? There's big decisions always happening. Something is always going on, which is going to make you feel pressurized to act on every single thing you're doing. The Fed are changing something, policies doing something, earnings is saying this is happening. Every red day can feel like a reason to sell, every green day can feel like a reason to buy more. That daily pressure, it compounds, it adds up. And daily decisions are hard to sustain. The decisions you make, the more opportunities, there are to get wrong. You've got to almost think of the downside and not the upside. Stress comes from it comes from, feeling like you have to act constantly. And, you want to be reducing that as much as possible and reduce that frequency. So it's adding to this way of, investing, active investing. It's adding to your life and not taking away from your life. In my view, the weekly and monthly is where the trends are live. Any big trend that happens for years, one big day typically doesn't define a 2-year trend. Yes, you could say, yeah, but that was the 5% day in a 50% move. I get that, but you've got to have that zoom out thinking. So zooming out is the simplest thing most investors can do. That to me is the easiest kind of frame you've got to have. So in my opinion, moving averages will tell you the trend environment. A bull in moving averages stacks. Let's say you've got a 50, a 100 and a 200 EMA on the daily chart or the weekly chart, wherever it may be. If they're all pointing upwards, we're bullish, we're trending. It's that easy. And if we're going down, we're trending downwards. Now, yes, you're going to miss the bottom. Yes, you're not going to get the top, but you're going to catch that bulk, in the middle, those parts, which is where most of the money is made and where the easiest money is made, right? So when the faster moving average sits above, the slower ones, and they're pointing upwards in the trend environment, that means bullish, and vice versa. So when you've got a 50, 100, 200 bullish, when you've got 50, 100, 200, that means bearish and we're going down. The month and the weekly EMAs filter out all that daily noise, so you don't feel have to make these big decisions. Take a look at Bitcoin, for example. Bitcoin has been bearish for a while, and you could just say, I'm bullish Bitcoin again when these start to point up. Well, you're going to be waiting a while, and these pumps from the lows aren't going to be a big factor in Bitcoin, doing its thing. And you're not predicting it. It's all confirmation. Moving averages don't tell you what is about to happen because they're telling you what is happening. Now, moving averages are a slightly lagging indicator. They're taking the previous time series, whatever you have against your moving average, and and that's what they're basing it on. But if they're trending up, something's going right, and it's definitely a reason to be long. So look, Nvidia's been a huge runner over the past year, or so. As you can see here, I've got a 12 and 21 EMA on the monthly. Look, we're going up. Nice dip there, bang. You could have said close inside, close back above, we go again. And look, and that is just trending on a monthly basis. And look, can you see any days in there? Yes, there'd be a days bigger than others. I get that. But look, if you got in there, you caught all that, right? Huge. So from 2015 to 2022, as you can see, flat. No real confirmation. You could say when these are clearly going upwards, I'm going to start to take interest in this thing, in this stock, whatever it may be. The trend was confirmed on the monthly chart before, we were in an AI bubble. We're now in an AI bubble, I don't know, here. The trend started there, all right? And look, and it's quite difficult when you zoom out. It's like, do I really want to get in on Nvidia here? It could still go up. You look at, I think, Microsoft in the 90s, for example. That just went, right? Could we be in a similar situation? Who knows? But it's important to zoom out, and the monthly EMAs or even the weekly EMAs are a really easy way to do it. So look, it gives you time. A monthly trend has barely started when it is confirmed. By the time the 12 and the 21 cross bullish, and maybe you wait a month or another month, you've got time. The trend that follows typically plays over months or years if it's going to be bullish, and it usually is worth taking that small bet and just seeing what happens. The weekly time frame does work. It can be a bit more choppy. I think the daily chart is slightly choppy. You can get obviously better entries the lower you go, but if you're a busy person, a monthly or weekly is perfect. And a weekly, you can check once a week and it tells you everything you want to know. Patience, becomes natural when you zoom out and when you're waiting for a weekly candle or a monthly candle. And the daily is too much, the weekly is doable, but the monthly is the anchor. The monthly is something that everyone can do. And look, you don't need to catch every trend, all right? So trying to catch every trend leads to overtrading and stress. So this is something I wanted to add in because you could say to yourself, okay, cool, when every 12-21 EMA is bullish, I'm going to go long. Well, trying to catch every trend is, it's a bit of a fool's game. You're just trying to buy every stock and there's no real strategy. So this can almost be a starting point and then you can build from there. So having the awareness, the skills, selection is discipline. So the selection process can be in many different points. You could say, if we cross, make a new high, all-time high breakout, or if we have a month, with a lot of volume, then I buy. You've got to have another filter on top of this. Because if you're just using this, you're going to be buying 50 different things, 5 of them are going to do really well. And sometimes that's all you need, right? So it probably is a valid case to do that. But look, one, choosing trend with conviction beats 5 with none, right? So, you want to have probably another filter. I wanted to put this in because I thought it's just being honest, it's being real. But look, you do need patience with this. Patience is part of the process. Waiting for a trend to develop on a monthly, it's waiting for the right conditions. You could be waiting years. If you're really bullish on our stock for whatever reason, this could almost be your confirmation. It's I'm bullish on Microsoft. Microsoft is really bearish now. You could just say, I'm going to wait till these monthly EMAs go bullish. And then I start accumulating more. Maybe I buy some here, but then I really get aggressive into Microsoft once it's bullish again. That's potentially a thesis you could do. But I would say you probably need another layer on top of these. So look, the verdict. The EMAs are bullish on the monthly or the weekly. The market is trending. That's your starting point. That is a base to work from. Zooming out gives you time. Monthly trends take months and years, not days to play out. A weekly check is enough for anyone. You can just check a week. Daily watching creates noise. You don't want that stress. If you don't have time to watch markets on a daily basis or you don't want to, I think a weekly chart is great. You can check it every Friday after the close or Sunday, whatever's easiest for you. And look, if you do want to keep up to date with markets on that weekly basis, I have a free newsletter. I'm always providing my take on markets, an interesting thing I'm seeing. So please do check that out. Link to that will be in the description, and I'll see you in the next one.